perspective. Let's move right on and bring a fundamental voice on the show. Sunil Subramaniam, the CEO of Sundaram Mutual, is now joining us on Markets at Lunch. Hi, Mr. Subramaniam. It's always a pleasure to have you on the show. Let's start with your view on the earnings that we've seen so far, especially in the consumer space, which you're betting quite a bit on. What do you make of the earnings so far? Because it's really been a mixed bag, whether it's the frontline names like HUL, of course, that's been extremely strong. But if you look at a lot of mid caps like Imami, like Marico, those have been a bit mixed. And even ITC today is poised to deliver a mixed sort of a bag. What's your view on the earnings so far, and what do you expect by the end of it?
You're right that it's been a mixed bag, but I think the key point is the way forward. So we are more focused on the guidance and how the outlook looks, and we are buoyed by the fact that the consumption outlook is looking good on the back of 2-3 things. First is the fact of the monsoon outlook being positive. So we expect rural consumption to come and kind of uphold the consumption numbers in the going forward quarter. Second is while rates have been generally tightening, we still believe that they are at a very competitive level for consumer finance, right, for housing finance. So they are still in this single digit kind of high single digit in terms of borrowing. So that will support the consumption. And third is the fact that from August next quarter you will have the festival season demand coming in. So we remain bullish on consumption as a space, especially with the rural tilt from a forward earnings perspective. So while the existing earnings is a mixed bag, our outlook remains positive on consumption.
Okay, point taken. And we were just chatting about the adverse movement that the rupee has been seeing, and you believe that IT, of course, is one pack which will benefit on back of the weakening that the rupee has been seeing or is likely to see going ahead as well. Is that all, or do you see more fundamental reasons to be betting on IT space, and whether it's the mid-cap ones or is it the large names which you're at this point of time upbeat on?
Fine. See, the rupee depreciation is just an incidental additional effect. The fundamental reason to be bullish on IT is primarily the fact that the advanced economies are coming back on a growth path. So investment in IT to help improve their businesses spikes up when they see a positive outlook on their business. So business confidence indices in Europe and US are going up. That's why the rate cycle is turning positive in terms of increasing rates there. That's driving the investment in IT. That's one. Second is this move towards digitization. I think that's the key driver on earnings growth, and there from a perspective we have been bullish on the mid-cap IT companies for quite some time because they are in the forefront of the digitization thing because they are nimble and able to respond to. That being said, I think valuations in the mid-cap IT have crept up a lot, and that's discounted the thing. But now we see from the latest earnings pack of the large cap IT companies that they're also showing a significant grabbing the market share on the digitization. They're also changing their business model. So basically fundamentally our bullishness from IT comes from recovery in the advanced economies and the move towards digitization. Currency is a kind of something overlay on top of this.
Hi, this is Nayantara joining in from the New Delhi studio. Sunil, after seeing what has happened in the broader markets of late, when you look at the valuation of the small and mid-cap stocks, would you say this is a great entry point? And this is a time perhaps that we are seeing portfolio managers become a little enthusiastic about this space?
Absolutely, because I think there's about 20% correction in that space. And if you look at it from an earnings forecast perspective, to revise. If you take our funds like the mid-cap funds, the earnings forecast over the next 2 years CAGR is upwards of 22-23%. So on such an earnings base, if you look at a 20% correction in the valuations, it makes it absolutely a great time to buy. Just bear in mind that the volatility will continue because there are external factors around elections, results. There's another set of state elections coming and the central election. So volatility will be there. So these are high beta companies, right? So remember that volatility will be there. But as you keep buying through this volatile period, at the end of let's say a 3-year time frame, this is going to be the biggest, probably there are a lot of multi-baggers sitting there based on these corrections.
Okay, so unfortunately we're running out of time. So certainly small caps and mid caps looking more attractive today from the valuations perspective as well as the earnings, as pointed out by Sundaram Mutual over here. Well, guess what? We're completely out of time. So we have to wrap up this edition of Markets at Lunch. It's a goodbye from the entire team. Many thanks for watching.